We've got Sunny Agrawal as well joining in on the show. Sunny, hi, afternoon. What is it that you're making of the market right now? Ripe in valuations, or there are still pockets where you think one can invest?
Yeah, good afternoon. I think market will continue to remain stock specific as we have seen many mid and small size company reporting a very good set of earning. At the same time, growth outlook continue to remain robust for the next 4 to 6 quarter. So rather than getting obsessed with an index level, I think stock specific activity is something which is likely to continue at least in short to medium term. That's our view. On the top of that, with an upcoming RBI policy, I think rate sensitive may continue to remain under focus. To the entire auto, especially two-wheeler pack, real estate, and banking. Within banking, PSU pack, where the bond portfolio holding is significantly high compared to the private pack. So there we are expecting some. Still, there is a potential of upside in this pack in the short to medium term.
Right, okay, that's the take coming in on the markets right now. Just looking at some of the laggards then today, and you can't take your eyes off from Bajaj Auto and the kind of, brokerage reactions that you had post the numbers. Of course, you're on the anvil of the monthly sales data as well when it comes to Motown. In fact, Shrishti, walk us through how the brokerage reactions have been on Bajaj Auto, and then of course, what is it that we anticipate in terms of the monthly sales?
Well, yes, firstly, on to the brokerage outlook for Bajaj Auto, there has been a downgrade coming in post the earnings because they believe that very much was already in the price given the fact that it was an inline set by the company. But going ahead, the KTM restructuring that the company is undertaking, that could be one of the biggest challenge as per DAM Capital, where they have gone ahead and downgraded the rating on Bajaj Auto from a buy to a sell now and have slashed the target price to 7,650 odd rupees. And they're also not finding the valuations quite favorable at this point in time. Along with that, Nuvama has also come out with a note. They haven't changed their target price for Bajaj Auto, retaining their buy with a target price of 10,700 rupees. So that's the brokerage verdict on Bajaj Auto. Very much seems to be in the price, and hence a 3% cut is what we are seeing. But especially when it comes to the auto sales data, all eyes on that. And this time, firstly, from two-wheeler pack, the numbers are expected to be really good. It's a double-digit growth that we are anticipating, given the fact that marriage season will help the numbers. Along with that, the rural demand is also perking up, and double-digit growth is what we are expecting for Bajaj Auto, Hero MotoCorp, as well as Eicher Motors. And especially for Hero MotoCorp, look out for that, because April month was kind of a washout quarter for Hero MotoCorp. So on a month-on-month basis, the company can actually post a 66% jump. Don't go by the number, but definitely that can do well for Hero MotoCorp. Other than that, from the passenger vehicle space, not much expectations, because in order to push the sales, some companies are actually giving discounts, and that's hampering the growth in the urban market specifically, and a bit of a decline is what we are expecting from all the passenger vehicle companies. Similar is the case with commercial vehicle segment as well. Not many hopes lying there. But lastly, from the tractor division, good set of commentary is expected. The farmer sentiment on ground is holding up very well, and that could give boost to the numbers as well. Escorts and M&M both are expected to show great set of numbers. So that's the kind of numbers that we are working with when it comes to the auto sales data. But Kunal, specifically I wanted to have your take on Hero MotoCorp, because that's I think that company will remain in focus, given the fact that they had an investor day back in the month of May. The company did delay it. So I think that the market is still working with or looking forward to what the actual announcement could be. The suspense is there. But what's your sense on the stock price? Break it down for us.
I think it's still a better chart than Bajaj Auto if I have to compare it, like to like for this two-wheeler major. But I think in terms of the chart specifically for Hero MotoCorp, what we have seen is that there's been slight higher jump in volumes for the stock, and from the move from 3750 levels to 4500ish thereabout was on the back of volumes which was almost like 1.5 to 2x of the volumes prior to 10 days of the prior consolidation, the price correction for Hero MotoCorp. And then post that we've seen the stock consolidating. So it's a much more decent chart as compared to Bajaj Auto, less volatile, more strong in terms of volumes. But I think in this kind of a scenario, and especially given the market texture, it is always better to wait out for that confirmation of a breakout for the stock, or else buy the stock when it dips back into that strong support territory, over the near term. That level for Hero MotoCorp would be closer to 4,150.
Right. That, of course, is the take coming in right now on, what's really happening across the two-wheeler segment. But Sunny, what is your own take, especially on Bajaj Auto? Pricing pressure clearly is visible for both the domestic as well as the export markets, which I guess explains the reason why they had to cut prices by 4 to 5% in the Africa geography. Having said that, the product pipeline is strong. That includes the, electric two-wheelers, entry-level 125cc bikes, e-rickshaws, and of course the new two-wheelers as well.
Yeah, so I think Bajaj Auto again a kind of a mixed bag set of numbers. So on one hand, domestic volumes are under pressure. On the other hand, export continue to do well. As you rightly pointed out, even on electric portfolio side, Bajaj has been consistently gaining market share on EV side. But the recent commentary by management regarding the overhang on supply of magnets, that is one of the key components for EV portfolio that can hamper volume in short term. To that extent, we believe that maybe FY26, at least during the first half, we may see kind of a muted growth on earning front as far as Bajaj Auto is concerned. On a valuation front, we believe that at current juncture, Hero MotoCorp look slightly better place where risk reward is favorable, trading close to 19 times price to earning multiple. Again, but Hero MotoCorp is also struggling in terms of volume growth. But looking at a valuation and the kind of free cash flow yield at which the company is trading at, we believe the risk reward is more favorable on Hero MotoCorp side. And at the same time, we would like to ride this entire sector through auto ancillary space, wherein many auto ancillary companies are likely to report a better earning growth compared to their OEM. For case in point, Lumax, both the Lumax, whether Lumax Industry and Lumax Auto, both the companies have reported good set of number, and we believe that the momentum will continue going forward. SGS Enterprises, Gabriel India, which is again one of the leading shock absorber provider to the two-wheeler industry. So I think auto ains are relatively better place as compared to auto EM at current juncture.
Right, so that's the take on the legacy players, Sunny, but help us with your take on Ola as well. But before we come to your take on the same, let us just revisit what the company, or rather what the stock price has done so far since the listing, because definitely it's down almost 66% from its all-time high levels, close to near that 150 odd mark just post the listing that the stock has witnessed. And from the listing price as well, when we see that the stock is down more than 30%, and that's of course being supported by a very dismal set of earnings, because the losses are once again on the books, and they seem to be increasing quarter by quarter. It's the fourth straight quarter where the losses have widened for Ola Electric, and it's over 800 crores of loss that the company has reported. Not just that, we all are aware that how the market share has been on the declining trend, because at one point in time the company used to be the leader when it comes to the electric two-wheeler space, but now look at the numbers. It's not just half from those levels, but 20% is what the company is holding. We are aware of the reasons, the kind of service issue that the company has been having. Other than that, some of the new launches, they did not garner that kind of a support that was anticipated, and the response there. So all these numbers have been not boding well for the stock price, of course, and still the heightened promise continues, because on the revenue front the company is expecting that it will catch up, and a better number is expected in Q1. The deliveries are expected to be close to 65,000, and the gross margins, while the company has promised gross margin improvement back in Q3 as well, they failed to deliver that, and now in Q1 they are expecting that from now 19.2 levels, 28 to 30% is what the company is working with. So all in all, definitely not a great set from Ola Electric. And Sunny, almost a 50 rupees is what we are seeing. What's your take on Ola Electric?
Yeah, I think a clear disappointment in terms of volume number and the way incumbent players are getting aggressive and gaining market share. I think this entire two-wheeler electric space is getting hyper competitive. With the recent listing of Ather Energy, I think even there is a pressure on Ather to deliver a profitable growth. So I think, as discussed during an IPO time, that till the time you are not, the company is unable to integrate its own battery pack, that will aid in at least 2 to 3% incremental margin. But ultimately, it is the volume number which matters in any auto ancillary company, any auto EM company. And the way volumes are dwindling for Ola, I think we would like to avoid at a current juncture.
Okay, that's the take coming in on what one has seen from Ola. But let's also take it across to Varun and find out more about Apollo Hospitals.
Well, so we are expecting good set of numbers from Apollo Hospitals, wherein the overall revenues are expected to go up by around 14%, and also the EBITDA is expected to go up by around 22.5%. The margins are expected to increase from 13% to around 14%, and the profitability that would increase by around 47.4% to 374 crores. Now, the overall beat on numbers would be actually because of the case mix and also because of growing volumes, especially on the hospital segment, which have actually delivered good results in the past as well. Also, the occupancy rates and the ARPOB are expected to increase this quarter as well. Although, if you look at the international business, that has been impacted because of the Bangladesh issues, and let's see how the international business performs this quarter. Other than that, the AHLL business, that is expected to do good, and the GMV for the Apollo 24/7 is expected to show a decent increase. Also keep an eye on the overall insurance business, because the company was supposed to do some tie-ups with some of the companies for this quarter, and some of the good revenues were expected from the insurance business in this quarter, which would aid the overall profitability of the company. So we are expecting good set of results from Apollo Hospital, especially driven by the hospital segment and also contribution coming from the insurance segment.
All right, thank you so much, Varun, for getting us all those details. So let's watch out for Apollo Hospitals. But moving on, in the latest edition of NSE Market Pulse, the exchange has noted that the promoter ownership fell for the third straight quarter in March 2025 to a 7-quarter low. But the domestic mutual funds continue to infuse capital. We will definitely get more details on this one. That's some interesting data right there, how the ownership has changed hands and how the domestic funds continue to support. And well, of course, we have been highlighting the fact that month-on-month basis, the SIP inflows continue to be quite robust, and that's quite visible on the domestic funds as well. But before we get to our colleague Anjali, let me just quickly have a take on Apollo Hospitals as well. Arpit, give us some sense that how is the chart looking like for Apollo Hospitals, because this counter too gets very volatile post the earnings, though this time it's a decent set that is expected. But what's the setup?
So looking at the overall the hospital space, if we see the chart structure of Apollo from last almost couple of months, it has been stuck in a range between 6,800 to 7,100. And if I look at the bigger time structure, so 7,100 is a major supply zone for the counter. But at the same time, on the daily chart, it is near its 50 DEMA, that is near its support zone. So looking at the chart specific wise, since it's at a support zone, I think from here on, more or less the counter would be sideways to positive, with immediate 6,800 would be the major support zone. Until the counter holds above 6,800, a bias would be slightly positive. Immediately, the chart is on the downtrend, but overall setup wise, a range bound to consolidative we're expecting for next couple of days.
In fact, Anjali is back with us, so let's get in the latest edition of NSE Market Pulse.
That's right. NSE has come out with its monthly market pulse, and this time the focus is on looking at the ownership patterns and how they've changed in the financial year 2025 when it comes to India Inc. So now promoter ownership in Indian stock markets continues to shrink. That's the biggest trend coming up. In the March 2025 quarter, the promoter holding in all NSE listed companies fell for the third straight time, and it dropped 28 basis points and is now at a 7-quarter low of 50.1%. This was sharper in the Nifty 50, where the promoter share declined by 57 basis points, and now it is at 40.6%, and this is the lowest level in over 2 decades as far as Nifty 50 is concerned. Now, government stake, which has risen over the past 2 years thanks to LIC's listing and PSU outperformance, that also fell to 9.9%, and this is the lowest in 6 quarters now. Foreign portfolio investors showed a slight return of confidence after a year of largely volatile flows. Their overall share in Nifty listed firms rose to 17.5%. Now, this was driven by a renewed interest in private banks. Now, when we talk about domestic mutual funds, they continued the steady climb, of course, thanks to strong SIP inflows, which was up 45% year on year. The domestic mutual funds share rose to an all-time high of 10.4% across NSE listed companies, and for the first time ever, mutual funds now hold a bigger share of the market than individual investors. So those are the latest trends in terms of ownership in India Inc. that the NSE's Market Pulse for the month of May has come out with.
All right, thank you so much, Anjali, for getting us all those details. So indeed, quite an interesting data there. But back to the markets. Just a few minutes left for the markets to shut shop. Nifty Bank is still holding on to the shade of green, but while Nifty 50 is sub below that 24,800 mark. But a lot of these chemical counters are boring well. And Arpit, if I can quickly have your take on Rallis India, because day by day we do see some of the chemical or fertilizer company having a good day, but a 12% jump. What do you make out of it? Because the earnings did come out, I think, almost a month back, but the stock is reacting positively and it's been a good journey so far.
So the entire space has seen a very decent rally. And if you talk about Rallis India as a whole, weekly chart, a classical range breakout. On the daily scale, it has given a consolidation breakout with good surge in volume. The stock is already up by 12%, but definitely it has more room towards hitting towards 335, 340 levels. So on the chart setup wise, on the weekly wise, definitely the stock can head towards 340 levels. That would be the immediate target for the counter. On the downside, 310 would be the immediate support zone.
Okay, those are some of the interesting ideas over there. Eternal, of course, is the one which is holding up very smartly. The PSB banks, they continue to hold up and they continue to look good. Led, of course, by SBI, Union Bank. These are all extremely buoyant names in trade. And then BSE has now surged up over 8% as we speak right now. Muthoot Finance scaling up even further. And NBCC as well has been looking very good. Kunal, any of these infra plays, starting off with L&T, NCC, NBCC, what's looking good for trade?
Yeah, I think L&T is one of the strongest name, of course, a more formidable stock. So that's something which looks attractive even at current levels. And my sense is that the stock should be good for at least another 80 to 100 points on the upside over the very short term. But the surprise mover over here could be NBCC. I've been tracking the stock over the last couple of months, and especially from the point when the stock has come back sub 100 levels towards 120 plus where the stock is trading right now. I think it's been an excellent move for NBCC. The long-term charts are quite positive, and it looks like that phase from many of the PSU names, which was in second half of 2024 till first couple of months of 2025, where these stocks fell by more than 30% to 50%. Some of them, I think that phase is now behind, or the major part of the mean reversion is behind for many of these PSU names. So bullish, or in fact extremely bullish on stocks like NBCC. Even from current levels, and for L&T expecting another 80 to 100 points on the upside.
Sunny, very quickly, within the infra pack, what's looking good to you?
Yeah, so within infra pack, obviously from a frontline company, obviously Larsen and Toubro is continue to remain our top pick. But within the mid-sized company, we believe NCC is sitting on a very robust order book. Although most of the infra companies have alluded that first half of FY26 can remain slow in terms of execution, but in terms of valuation, again, NCC is looking very attractive. Another player, PowerMech, which has reported a very good set of number and sitting on a robust order book. So PowerMech is one company which we are constructive on.
So that's about some of the interesting ideas related to the infra space. But with this, let's also get you some of the other ideas from our experts, and let's get you the BTST or rather STBT ideas as well. Arpit, help us with your stock ideas.
So we have two ideas. One would be from the PSU pack, as PSU banks are witnessing good momentum. So first one would be Bank of India. So a classical range breakout on the daily and the weekly scale with good surge in volumes, highest ever weekly close after 7 to 8 weeks. So this would be our first idea with keeping stop loss of 118 for an upside move towards 128. Second would be from the new age company, that is Paytm. So overall, Paytm has been moving in a triangle, and today it has given a symmetrical triangle breakout on the daily and the weekly scale. So risk reward quite favorable,
trade wall.
and we can see a
In
good move
house
towards
it.
930.
No?
So this would be a second idea with keeping stop loss of 860 for an upside move towards 930.
Those are the two calls coming in from Arpit. But Kunal, what about you?
So, two buy calls. The first one is one AB Capital, a stock which is start to look attractive, a bullish flag formation breakout on the daily charts. So, would look out for 240 as the target, stop loss at 215. And the second is one DCB Bank, and after quite some time, the stock has made a very strong comeback. Would look out for targets in the range of 155. Would recommend a stop loss of 143.
All right, so those are the buy calls coming in from Kunal. But Sunny, I'm not sure whether you will come out with the specific targets, but any theme that you believe can work well in the near term?
Yeah, so I think one company where we have recently come out with a result update is Good Luck India. Again, it's a small cap, a structural steel tube as well as a play on defense. So there, I will repeat the name Good Luck India. The price target there we have of 1200 rupees. So we believe that their defense plant is getting commercialized in the second quarter of FY26. So that will aid the earning growth, again trading at a very reasonable valuation. So Good Luck India is the one stock which we are preferring at a current juncture. One more stock which we like is LT Foods, which is also known as Dawat, again a branded rice player, having presence in India as well as US through Royal brand. So there we have seen a kind of a bottoming out in terms of basmati paddy prices. So since the stability will return to the rice as well as paddy prices, we are expecting a decent growth over there. So Dawat Food is another stock which we are recommending from short to medium term.
Okay, that's the take coming in on some of those preferred ideas. Just
if you like this video, then like, share and subscribe to ET Now.